part of things. You know, being with an investment house, a wirehouse, an investment bank like Morgan Stanley, and then working at Merrill Lynch, and then eventually J.P. Morgan had merged with Chase. So you have an investment bank merging with a retail bank, which would give even more of the opportunities to deal with high net worth individuals. So on the continuum, there are 6 things that people normally look at when they're trying to talk about money from a large perspective. And the 6 steps normally is step 1 would be an assessment of where you are. Step 2 would be protection of where you are when you figure out what you have and your needs. Step 3 would be investments. You're really trying to get to a place where you're investing and accumulating stuff, but on your way toward those investments, something had happened. That's why you need step 2, which is insurance or protection. Step 2 is insurance. Step 3 would be investments. Step 4 is tax planning, because it's not just how much you make, it's how much you keep.
Right.
Step 5 after tax planning would be retirement. And step 6 would be transitioning, or a legacy transitioning, or wealth transitioning. So I had only been focusing on the investment portion. And at Merrill Lynch, we normally had larger accounts. And when I just looked at the people who were family and friends of mine, I saw that there was more of a need that I could reach if I had a different platform. So I came looking at the pain of my own family situation, looking at what I wanted to prevent in a lot of the lives of my friends and family. New York Life gives me the platform to also do the investment stuff that I always like to do, but it lets me step back and focus on some of those insurance needs with a little bit more detail.
Right. And you mentioned these 6 steps, and I know a lot of people, if they're focused on any one of these, from my experience in working with clients and just knowing people throughout my lifetime, many people are only focused on maybe one of these 6, if any at all.
Yeah.
You know, so a lot of people are stuck in the assessment phase or in the investment phase, like you said. And, you know, there are people who are working, but they don't do any kind of tax planning. And so they wind up with significant tax issues, which we are going to do an upcoming show on tax eventually too this year. And, you know, there are a lot of people that don't think about retirement until retirement reaches them. So, you know, it's so from what I'm getting from what you're saying is that, you know, you have to have a holistic view of where you're at, and that starts with the assessment, and then you figure out, you know, with a financial planner or an attorney or both, how to put all of these pieces together to make them work for you.
Correct.
Okay.
And what happens is most time, you know, people are really stuck in their ways. And it's coming alongside as a financial coach is where the hardest work, I think, for me has been, because people are used to doing what they're used to doing, or they're very private. They don't want to share a lot of the stuff. And some are just very, very set in their ways. But if you want to keep getting what you're getting, keep doing what you're doing. But when you're really ready to do something different or get something you've never had, you've got to do something you've never done.
Right.
And that's where the financial coach comes in. So I don't know everything, but I'm confident that I can bring some great ideas and more ideas than a person currently has. And I think together, when people want to work together, I've had a chance to reach some extraordinary results, great success with a lot of people.
Yeah, and that goes back to, you know, developing a relationship and then building trust. Because these issues, financial planning issues, are very personal. And so people are reluctant to share that information, or they feel like they haven't saved properly, or their credit is messed up. And there are different issues that people may be embarrassed about speaking about themselves to a stranger. But these are issues that I encourage everyone out there to take advantage of this program, and afterwards to go and do some more research on your own to figure out where you are in any of these steps, and to try to put all of them together and fit them into your own personal financial planning situation.
And that's true. Similar to when a person has a health issue. After your home remedies don't work anymore, you got to eventually go to a doctor.
Right.
And eventually just getting more input on how to work it out. It's not like you turn the whole thing over to another person, but you're enlisting or enrolling other sources to help you find your solution.
Right.
So similarly, that's all it's been with financial planning. If you meet a person who acts as though he or she knows everything, you need to run, because no one knows everything about anything like that. So
that's true. So you're listening to WHCR 90.3 FM, the voice of Harlem, and today's guest is Arlington Medley, and he's a financial advisor at New York Life. So Arlington, tell us how insurance fits into the financial planning process.
Well, as we talked about those 6 things, it's a holistic macro perspective. It's dealing with all of those things at once with various goals. Different people have unique situations that need to be taken care of. For example, I'm a big fan of wealth accumulation. I'm a big fan of people figuring out what their financial goals are and reaching those financial goals. Whatever your number is for retirement, hitting that financial number.
That's like that commercial.
Which commercial?
That commercial, I think, ING, they do what's your number. You know, that, people carrying around those big numbers. And, you know, they're talking about you got to know what your number is.
There you go. And there are different ways to reach it, and different people have different numbers.
Right.
So my understanding of finances that I learned through a lot of trial and error and things that I didn't know a lot about passive income. I thought you got a job and you basically spent the money and hope you had something left. And instead of having more money at the end of the week, you had more week at the end of the money kind of thing.
That's true.
So I'm a big fan and advocate of
now
passive
explain
income.
to us what passive income is.
Passive income is the money that you'll make while you're asleep, the money that you'll make if you don't have a job, the money that comes in while you're doing anything that you want to do. So passive income is money that you're not actively having to be on the job to make. So, for example, I had a gentleman who he realized that a lot of people had done very, very well getting their passive income through rental properties. And he understood a little bit about construction and knew how to buy low and fix them up. So every $30,000, he'd buy a small house. He'd put about $20,000 in it. And for $50,000, he then now had a house that he could Section 8 out. And Section 8 would pay about $1,000 to him every month. So he knew that what his bills looked like and what he wanted to retire with, that he needed 5 of those houses. The only bad thing that happened was at house 3, he died.
Oh, no.
And at house 3, while he had this wonderful plan, he didn't put a safety net underneath him, which would have been insurance. And the pain and the embarrassment that fell on his wife when she could no longer stay into the home that they had, when the 2 kids, they had planned on going to Howard University Business School. They had to choose a different route, honorable, but different when they went into the United States Army instead of being able to go to Howard Business School, and just the things that befell that family. So I'm a fan of wealth accumulation. I'm a fan of building that passive income that works before retirement and after retirement. I'm just saying that insurance comes in as a safety net to work while you're working on that master plan, to have in place that the kids, instead of getting a debt, they'll get a deed. Instead of the wife getting, the pain of your loss, she'll get the pain of your loss and the blessing of you being able to continue to provide because you have put things in place.
Right. So what do you think some reasons are why people don't get insurance?
Lots of wonderful reasons why people don't get insurance. I give seminars around the region.
Or one of the reasons because in today's economy, there are a lot of people who are unemployed and don't get the insurance normally through their employer?
Well, even when you have insurance through your employer, the dangerous thing about that, people switch employers all the time nowadays. 20 years ago, 40 years ago, not 20, maybe 30, 40 years ago, when people had the same employer, then that would work. But in a lot of cases, your insurance doesn't exactly always travel with you from employer to employer. That, along with other myths that people keep in their head, if I get some insurance, something will happen to me. Or insurance is really expensive, I can't afford another bill. Or as I give some of the seminars in churches, one of the number one answers, the Lord will provide. Another answer, nobody had something for me. I started from scratch, so I want my kids to start from scratch. Another answer, I don't want my wife to be left with money so she could be with somebody else, and I'm going. Another, answers like that are always out there, and they're the pink elephant that's in the room. If you address it or not, it's there, and we have to go there.
Right.
But most times, I think a lot of people have not been approached, and a lot of people don't know that regardless of their situation, if you can fog a mirror, there is an insurance plan that with your name on it that you need to really, really, really consider.
Okay. All right. Because I know a lot of people think that either I have to get a a physical from a doctor to be approved for insurance, or that I'm too old to get insurance, that I'm at a certain age, so I'm uninsurable, or that it could be too expensive. Those are some of the kinds of, I guess they're myths, to some degree, that people don't see how insurance is going to play a role in their life. And it seems to me like a lot of people think about insurance when you need it instead of thinking about it before you need it, because it's supposed to be in place before you need it,
right?
Not when your house gets robbed or burned down,
Right.
Or when you're sick and in the hospital and wondering how you're going to pay these bills. And you need to have it in place before then. And health insurance is a little different issue because of everything that's going on now in Washington. So that's slightly different. But in terms of life insurance, some of the things that I've heard is that, I'm not going to benefit from it. So it's not really a benefit to me now to really think about it or spend money on it when I could be spending money on something else. Because you're not going to be the beneficiary of your own life insurance policy.
Again, any day that ends in Y, you can get a policy. Mm-hmm. And the thing about the policy is, what are you getting it for?
Right.
And showing people that there are lots of things they can do with the policy besides just die and leave money behind. It's a chance to be a blessing to their church. Again, a lot of churches, you go to the church, do you love God? Yeah. Do you love the pastor? Yeah. Do you love the church? Yeah. Do you give to the church? Yeah. If you were no longer here, would your gift still be here? No. Do you want your church to still be blessed? Yes. Mm-hmm. So then we could talk about ways of them leaving a gift to their church that will keep giving beyond their being in the seats. We have people who want to give to their fraternities. Mm-hmm. Their fraternities have met a lot in their life in different parts of their life. Mm-hmm. So we set up opportunities for them to leave gifts to their fraternity,
right.
their undergraduate universities. People love their historically black colleges and universities. Right. They want to do something. They don't have a lot of money now. Hey, for $10, $15, right. $20 more a month, you can leave a nice gift in the name of you and your wife, or your mom and your dad, and whomever name you want to leave it.
Sure.
And that's another great feeling that gives, that a person can get from leaving a gift and not just dying and leaving money behind.
Absolutely. Absolutely. So when buying insurance, what kinds of things should a person be thinking about? What should they consider if they've made the decision to go ahead and try to research some issues about what type of insurance is best for them?
Well, for example, why I chose to work with New York Life is basically an answer to those things. There are three things that I think everyone should have in mind in whatever insurance they're trying to buy. One, does this company have a reputation and a history of paying out? Two, is this thing well capitalized? Do they have the money? Do they have money? Are they well capitalized? And three, those first two are really important. Does the company have a history of paying out? Three, are they well capitalized? But the third one, what are their ratings? How are they objectively? What are their objective ratings from the objective company? So you have Moody's and Standard & Poor's and the various. What are the ratings like? So if you were approached by a person from the name of a company you couldn't even pronounce, those three things should kick in. Okay, do they have a history of paying out? What are their ratings? Are they well capitalized?
Well, where could somebody find that information? I mean, like say the capitalization. Where would someone find that information? Or where would someone find, if I have Allstate Insurance or State Farm or something like that, or Zurich, how would I find out what their ratings are and if they're well capitalized?
Again, the same way we would find out the performance on automobiles. If we're doing some research on a car, we think about getting a car, we probably spend an hour or two on the internet, depending on where you drill down, and you'd get consensus from a bunch of things. Again, you could always go to Standard & Poor, you could always go to Moody's, you could always go to the major rating companies, and some of their listings would be also online. But those things are also listed in most libraries, and whatever the pecking order, whatever the process would be for a person picking anything, a house, a car, or whatever your normal thinking process would be, those same places that you would go get that kind of information, that same energy would also bring you the information on the insurance company you're thinking about working with. But again, you don't want to move too quick and think lightly on that, because you won't be there to make sure the persons are making good on all those premiums you put in. So you really want to go with something that you feel confident with, that, they have a history of paying.
Okay. So this insurance that we're talking about is different and separate than the insurance that you may get on your job if you're employed. Is that correct?
Yes and no. You can get major companies through different jobs.
Right.
Some jobs offer health insurance and life insurance.
Right.
And you get a choice. Teachers are getting offered health insurance and life insurance. A lot of jobs are offering health insurance and life insurance. However, some jobs, the insurance that they offer, just like the health insurance that they offer you, is only good while you're there.
Right.
And since people are moving around a lot, some people have thought it wise to have their own insurance.
Okay. Okay, I see that. So what types of insurance are people looking into? What kinds of insurance are you finding that people are asking you about?
People are always first having a need, and then the need then goes into their budget. The three things that you have to have, to really have a good conversation about insurance: you got to have a degree of health, a degree of money, and a degree of some people that you love. You got to love some people. You got to have some type of need. And once we can figure out what the need is, then we can figure out what insurance more or less fits, or more or less is tailored to that need. Some people have a need because they have young children. They've gone into a new work situation. They really don't have a lot of cash. But if one of the persons were to pass, they have a number that they would need to cover immediately, and would need to think about the next couple of years before the family could be back on its feet if the breadwinner or one of the parents were gone. So in that case, if they didn't have the money but they had a big need, we probably talk about a term policy. A term policy can come in a lot cheaper than a whole life policy. So some people realize for their immediate situation, they want a term policy. Maybe as things get better, they would sometimes want to change it to a whole life policy.
Okay. So explain for us the difference between term and whole life.
A term policy is a contract that will pay whatever the agreed face amount is if something happens to you during that period or during that quote-unquote term.
For an example?
For example, if I got a guy, he's 46 years old, he has some needs, but he doesn't have the finances to do anything big, and we want to get $250,000. We can get $250,000 on him for less than $50 a month. So he doesn't have the money, but he has a need. So for less than $50 a month, maybe $30 a month, we can get him $250,000 of term insurance.
Okay.
And in that case, for whatever the period for that term is, let's say he has a annual increasing term, or let's say he has a 20-year fixed price term, or a 10-year fixed price term. The premium is going to be the same every month without a changing one. Whatever the thing is, it's only for those amount of years. It'll be for 5 years or 10 years or 20 years or 30 years, but it's going to be for a fixed amount of years. And after that time period, if he doesn't pass on during that time period, at the end of that period, the term is gone.
Okay.
And the price is gone. Whereas if a person had a whole life policy, it would cover their entire life for all their years, and they'd have that same price.
So what happens to that money that he's paid in as premiums if he lives beyond the term?
He's glad that he paid them and had that safety net. The money's gone, and he's glad he didn't have to use it because he's alive on this side, and it worked as protection.
Okay.
It worked as pure protection.
And if he or she dies during the term?
Then he or she would get that face amount, the $250 that I just mentioned.
The beneficiaries.
The beneficiaries would get that face amount, correct.
I see. Okay. So that's that type of life insurance policy is what we commonly think of when we talk about life insurance, that someone has a policy on their life, and if they die during that term, during the term of that policy, then that benefit will be paid out to their beneficiaries.
Actually, I think it's the other one. I think normally when people are talking about life insurance, they're actually more cases than not talking about whole life.
Okay.
Especially in a lot of the African American communities, that's all they knew. They knew to get life insurance, get a job. You can stay here. When you moved up here, you got a bunch of months, but you can stay here as long as you get a job and get life insurance. And they were talking whole life.
Okay.
And whole life builds cash value. There's a reserve of cash that builds that people can borrow against. Banks recognize cash value.
So how does whole life work? And how is it different than term life?
Whole life compared to term would cost a bit more because while you are young or while the policy just starts, it takes on more so that later on when you're older, the risk that's higher will be leveled out. So there's more money that goes primarily in a whole life policy. Basically in the beginning, that's more of a mathematical, deep kind of actuarial conversation, what happens with the money and why the money more. But whole life normally costs more, but the benefits are it builds cash value. It's a premium that lasts not for term, but for your entire life. It can be used in many different ways. Back when banks were sort of frozen and didn't seem to be doing a lot of things, people who had whole life policies were still able to do things with their businesses and do things with their family and do things with their homes because they're able to tap the whole life value. There's also a surrender value. If you, for whatever reason, you didn't have a need for the policy or you couldn't keep the policy anymore, there's a surrender value of cash that you can leave with. You can borrow against it and put the money back so it doesn't take the face value of the amount that you leave to your beneficiaries. So the whole life policy has a lot of flexibilities, a lot of wonderful options that most of the time when people are talking about insurance, they're talking about whole life. When they can't afford whole life, then they know they still can get insurance. But that's when it's time to talk about term and convertible term that can be converted to whole life when a person gets on his or her feet.
Okay, I see that. So if you have whole life and you die during that term, so to speak, but you said it's for your entire life.
That's right. Whole life.
So if you do have whole life, which makes sense. So if it's for your entire life, then if you die while that policy is still in effect, then there's a benefit that's also paid out.
That's right. The beneficiaries get whatever your face amount. And the fun thing about, not fun, but what some people would consider fun is, in most cases, it's income tax free. It's income tax free. A friend had a situation where he could not afford to lose any money. And he wanted an investment that was a surefire investment. And he was speaking to his father. And his father said, well, I have a surefire investment for you. And he said, no, Dad, I need a surefire investment. And his father said, I have one for you. And he said, well, what is it? His father told him to get insurance on him. His father was an older man, and his father was able to find, I don't know what company they were using, but his father found one that was going to be a $2,000 a month premium, which is considered high.
That's very high.
But it had a $500,000 face amount, and the father was 80 years old. And he said, son, if you spend $2,000 a month for 12 months, that's $24,000. He said, call it $25,000. And if you do that for 10 years, that's $250,000. So if I live 10 years, you put in $250 and you get out $500. He said, if I live 20 years, you break even. He said, I probably won't make it to 100. So the son followed the father's advice. And the father lived to be about 83, 84. And then he had the $500,000, and the son was happy, sad, crying at the father's homegoing, realizing the wisdom that his father had and the love the father had to make that type of sacrifice and make that type of suggestion.
And I was under the impression that someone of that age would have difficulty getting a policy on themselves.
Well, the difficulty would be, again, if you could fog a mirror, any day that ends in Y, there's a policy that you can get somewhere.
Oh, okay.
So he knew that it would be a policy, but he knew that it would have some exorbitant situation like $2,000 a month.
Right.
Most people would just shy away from something that's $2,000 a month.
Right.
So that would be the prohibitive step in getting one when you're 80 years old.
Right.
But he was able to find one, and they went forward with it, and you can get a policy. It's just that you can always find one also that's more price conducive or fitting with one's
So generally speaking, what are some of the requirements that an insurance company will look at when you're trying to buy insurance? Like if I'm trying to buy insurance from New York Life, what kinds of things would I have to disclose to them about myself, my health, or of course, my age? But tell us what kinds of things insurance companies will ask us.
Well, it all starts with the application. It starts really before that. You have a conversation with a financial advisor, or an insurance agent, whatever, and that person is going to listen to see what the need is. And as per the need, you then go towards what the product would be or what the solution might be. Mm-hmm. You fill out an application. The application then goes to the underwriters, and then they look at it and figure out if, where they square with this, how much it would cost, and what policy you're trying to get. So again, it's very unique, almost like a fingerprint. You have to look at the family situation, what the goals are, what are we trying to do, when will situations be different, how much time are we trying to cover, are we trying to pay for estate planning taxes, what is it that we're trying to do? So once we figure out where we are trying to, stop the bleeding, stop the pain, stop whatever gap we have, we can then move forward. The application is going to say a whole lot, but what you're applying for is going to be the difference. So if you have a situation with some applications where you're trying to get a $5,000 burial policy, there's probably not a lot they're going to ask. It may be one page.
Right.
They want your name, they want your social, they give you the thing, and you start the thing as soon as they get back to you.
Right.
If you want $50,000, you can imagine they're probably going to want more stuff. So when you want $500,000 or a $5 million policy, as it moves up, looking at your age and looking at the amount, more things will be asked. So in a lot of basic situations, the insurance company is going to require a light bit of medical information, or they'll come and get a light bit of medical information. Most people are afraid, like, oh my gosh, this person's going to disqualify me, the underwriters are going to throw me out. They probably will not throw you out. The medical exam is more of, and I look at it as more of, and I've seen it more of, something that guarantees price. Okay. They're trying to look and see if you're very, very healthy, or a fiber-eating guy who runs around Central Park every day, or if you're the exact opposite. They're trying to figure out price in a lot of cases to see where the risk comes in, where it could be a fair understanding from where you are and where they are that this contract can be fair.
Now, what about the off chance that someone gets disqualified because of health concerns? Can they still find insurance somewhere?
There is somebody somewhere that wants to write the policy, that wants to make a contract here. And there are some people who in situations get turned away, or they get information back from the underwriter that they don't like, and they still go forward with the contract. With New York Life, every year you can get re-rated. Say, hey, you know what? I lost 20 pounds. I've not been, doing any of the bad stuff that I used to do, and I like to get revisited. I'd like to revisit this so that when one sees that change there, it can actually change the price sometimes.
So people don't need to be afraid of any type of extensive medical exam or something like that?
Medical, not at all.
And age doesn't disqualify you?
No, all those things are only going to play into the price.
I see.
You're going to get offered something, and you can go back and forth. You can change the face amount. You can change different modes of how you pay. They're going to try to massage it in a way that we can make a deal.
Right.
So that the medical is not something horrible. And in some cases, some people found out some things that they wouldn't have found out on their own, and were able to handle it and take care of some things. So they were thankful that there was a medical. So the medical is more or less, I like to present it to myself and to people that I love and trust as something that's going to more or less determine price. It's not really going to try to kick you out. It's more or less there to try to determine price. So are you select preferred? Are you preferred? What type of category of health do you present that we can match it with the prices for your age and your face amount? Okay.
So that goes into a lot of the popular misconceptions that people may have about life insurance, that you have to be under a certain age, or you have to be at a certain level health-wise in order to qualify for insurance.
That's it. Most people don't know what they don't know.
Right.
They don't know what they don't know. You know what you know. Like, I know how to drive a car. You know what you don't know. I know that I don't know how to drive a submarine. But that third category is where real life happens, where you don't know what you don't know. And that's where insurance often is. People have a lot of myths on insurance. There are a lot of armchair sales agents that tell you about insurance. They've never read about insurance. They've never taken a test for insurance. They're not licensed to give advice.
Right.
Those who know don't tell, and those who tell don't know. And insurance is one of those subjects.
So what are some of the other misconceptions that people have about life insurance or purchasing life insurance?
One of the biggest is you're not insured for the first 2 years.
Okay.
That if you die within the first 2 years, your beneficiaries are not going to get anything. And that's not true. What happens is after the first 2 years, the incontestability of the contract, the application that you made,
Right.
goes into effect. That is, the insurance company has the first 2 years to really look through your application so that if you said, hey, I'm perfectly healthy, everything is great, and you came across as perfectly healthy and everything's great, hey, I've never had a problem, and then all of a sudden after they give you the contract, you fall over and something was wrong.
Right.
So something like this guy wasn't what he said. In that first 2 years, they then can look at that policy and say, hey, we then checked over here. We found that this
Right.
guy was going for these, procedures. So in that first 2 years, they can look at the application again to make sure, that there were no direct or purposeful misstatements.
Okay.
But you are insured from the time that they work out the contract.
But then after the 2 years has passed, then
the insurance company cannot look back on
Right.
the application like that. But the
Okay.
misconception that's so popular is that you're not insured during the first 2 years, and that's not true.
Okay. All right. Well, that's good to know because I know of a couple of recent situations that I've come across where people have thought that there could be an issue if there was a possibility the insurance company was not going to pay out. But I was given information that you need to look at your policy to see how long has it been in effect, if it's in that 2 year window or if it's past the 2 years.
Well, it's not the 2 years. I mean, if a person didn't make any serious misrepresentations,
Right.
You can go forward with your life.
So you're basically insured from the moment you take out that policy?
Correct.
Okay.
And it's just that in those cases, people all know a case, or every
Right.
story starts off with, I got a guy, right? Everyone
Right.
has a story where someone passed within the 2 years and they were with an insurance company that looked back at the application and saw some discrepancies
Okay.
and decided to return their premiums instead of paying the beneficiaries the face amount. So
Okay.
that may have happened. But that doesn't mean that people are not insured in the first 2 years. That means that every once in a while, an insurance company will look back and see that someone made some misrepresentation on the application.
Right.
And they'll take their option of looking at that in the first 2 years in some cases.
Okay. For our listeners that are just joining us, we're speaking with Arlington Medley, who's a financial advisor at New York Life. And today's topic is insurance. So I encourage you to call in at 212-650-6903 and ask Arlington any questions that you may have about insurance or any kind of situation that you've always wanted to know about or a situation that you're currently dealing with. You're listening to WHCR 90.3 FM, and this is the voice of Harlem, and I'm Tony Johnson. This is Legalese. And Arlington, I wanted to ask you, tell us a little bit more about the work you do with organizations and what kind of work you do with them.
My thing is I've always been very, very committed to the family. And getting into this type of work gave me an opportunity to work directly with families. And while working with families, I also saw another aspect of a life was there were organizations that also worked with families. And I saw a lot of churches and civic groups and various things like that, and they were suffering financially. And though they did great work, and though they were very, very needed and people passionately believed in them, some of these organizations suffered horribly financially, and their work couldn't continue. Whereas on the other side, I saw a bunch of other organizations that similarly had a passion for community or passion for a target group, and they didn't suffer financially. And when I looked more closely at the two, I saw that one of the biggest differences was that one was endowed and one was not. One had the wisdom of people who loved the organization enough to move with strategies that would continue to be a blessing financially so that the work of the church or the work of the organization or work of the fraternity could continue beyond their mortal days. And what they did was they either had a really, really large estate and they could have these bequest situations, but then there were others who didn't have large estates, but still had heart and passion. And through life insurance, they were able to make a gift to the church, make a gift to their fraternity, make a gift to their organization. And though it didn't cost a whole lot of money, they were able to leave nice-sized gifts that made them feel better and continue to make the world a better place and continue to help families through somebody making that type of passionate move towards endowing and being a part of endowment.
And how would that process work?
I have a woman who has a life insurance policy that she's been holding for a bunch of years, 20 or almost 30 years. But she realizes that she doesn't have any room on that policy to change any of the beneficiaries. So what she wants to know she can have a small policy that's going to pay $50,000 to her church. And she wants to know how we can do that and how difficult will that be. And I'm happy to let her know it's not going to be difficult at all. And we write a small policy for $50,000. Really, hers is a little bit larger. A portion of it goes to her grandchild, and a small portion goes to her church. Wow. And she feels a whole lot better. And her church now has a line item on their annual report that talks about the endowment or the trust or how much insurance that they're holding basically in force, showing that people are having a commitment to it. And her lone action has started a viral reaction from the church, where a whole bunch of other people are saying, hey, for $15 a month, $10 a month, $20 a month, I can leave a gift that'll keep giving beyond, me being in the seat. And a lot of people are feeling really good that they're supporting organizations that support families and support communities.
So explain to us some of the issues surrounding people who want to take out policies on, say, children or relatives or other people other than themselves. Well, how can they go about doing that? Is it just a matter of just paying the premium for them, or is there something else involved with that?
There's this thing called insurable interest. For example, there has to be a reasonable connection to somebody, because then if there was no need for a reasonable connection, then I could put it on somebody and I can make sure that person is gone by the end of the year. And we'd have a lot of that.
And that sounds pretty illegal to me.
That sounds scary. So with insurable interest, it's normally a reason why, or some connection you have to a person. There are people who want to put it on a family member to make sure there's not only enough for a burial expense, but there's also enough to provide for the family in a way. There's some who put it on different family members so that college can be worked out and guaranteed, because a grandmother wants to ensure that a child is able to go to college. So she takes out a policy on herself. There are tons and tons of uses for life insurance that people can jump into, when they realize, again, that they have a need. So there are a lot of people who have it on their parents and their grandparents, and there are a lot of people who also take it out on children. So that, why would you take it out on a 2-year-old? Why would you take life insurance out on a 4-year-old? Not just in case something happens, but knowing, again, that if it's a whole life policy, when that child is 18, he or she can tap it and use it for college. Or if the child doesn't need it for college and the child's 22 or 25, he or she can start a business using, again, the cash value in a whole life policy.
Okay.
So there are tons and tons of things that people can do, but you have to have some insurable interest. So you can't take it out on a guy that that you're going to make sure is not going to be here at the end of the year, or we'd have a wild society. Yeah,
that sounds pretty scary. So we don't want to do that. But I mean, that's important for people to know for all kinds of purposes, for wealth creation in our community, also for estate planning purposes as well. And we had a show a few weeks back with an attorney who talked about estate planning and having a will, and then also having a life insurance policy, as part of that whole process of having a beneficiary and taking under a will, and then also receiving a benefit from a life insurance policy, which are connected, but they're not the same.
See, but again, the people, I guess the misnomer when you work at an insurance company, they imagine you only do insurance. But again, it's about wealth accumulation. My goal that I work with all the people that I work with, and please give my name and number tons of times so that I can get people. I guarantee that there are strategies we can use that get us to wealth accumulation, which will include how we're going to retire, what retirement looks like, and doing some things now. It is not just about getting someone's money for insurance that hopefully they'll never use or hopefully leave money. No, it's a bigger scheme. It's a bigger philosophy that gives a person the financial freedom to be who they need to be for their family, who they need to be for the organizations that they find meaningful. And it's one of wealth accumulations. So it's not just insurance. We have annuities. We also have insurance contracts that have variables, financial instruments connected to them that go with the market. So there's some insurance policies that would have a mutual fund with it, that it can increase the death benefit, and it can do other things with cash value because a mutual fund is connected to it. We have other products that go beyond just term life or whole life that may need, someone to have a chance to talk with, an advisor like myself, to unpack. So we talk about the things with businesses, business succession. You have a business. How do you pass it on? How do you get out of the business? Different ways we work out strategies for that. We do the things with churches. There are a bunch of churches that are still doing well and don't have 1 million members. What happened? Those are the ones that are endowed versus the ones that are living Sunday to Sunday, plate to plate.
Sure.
So there are a lot of ways to bring these solutions that make a difference to families and to organizations that help families.
So, Arlington, how can people get in contact with you if they have direct questions about their particular situation, or if they're interested in getting more information about insurance or financial planning?
Please, in this high-tech world, I know everyone has this high-tech way of doing it, but I'm still sort of kind of person to person. I have a direct number that anyone can reach me. It's 215-435-2241. Again, that's my direct number. You can reach me anytime. I wouldn't suggest any time, but any good time, right. 215-435-2241.
He means anytime. You can call him anytime. This is a very passionate subject for him, so I know that that if you have an urgent question, he'll get back to you.
Please, I'd love to meet with anyone to sit and see what the situations we have and how we can reach. Again, the goal is wealth accumulation. What does it look like to retire? What is your number? How do we get this passive income? Will it be through market instruments? Will it be through an annuity? Some people have pensions. So when you add your pension with your Social Security, will that be enough money? If not, we need to get an annuity possibly. Or we need to talk about rental properties. We need to look at one situation to see how we can reach whatever that number is that a person is really trying to reach to take care of himself or herself and the family.
Right, exactly. So again, Arlington's number is 215-435-2241, and he's based in Philadelphia, but you can call him or you can reach me here at on my Facebook page at Legalese with Tony Johnson, or you can reach me on Twitter at Tony Legalese, or my email is legalese@gmail.com, and I can get the information over to Arlington. So a lot of what we think about when we think about insurance has to do with a holistic view, as we mentioned earlier in the show, for your particular circumstances, and whether that's to leave a legacy for your family or for an organization that's important to you, like your church you mentioned.
Fraternity, church.
Your fraternity. You mentioned fraternity. I see Arlington, for those of you who don't know, is a strong fraternity man. He's got at least 29, 30 years
30,
in.
I call it 30.
No, it's 29. and I know that because I've known him for about all of those 29 years. And so I know that there are programs within all of these organizations which will allow you to leave a legacy and provide a benefit to these organizations if that's what you choose to do. Correct.
Mine's a little different because mine, again, works with the philosophy of a person reaching his or her wealth accumulation goals.
Okay.
And as per that, in a larger plan, in a whole financial plan, that gift goes to all the things that a person would care about. And that's a great, great feeling.
Right. It absolutely is. Absolutely is. So if people want to find out more about insurance or what kinds of products are good for them, what do you recommend that they do?
Give me a call, 215-435-2241, eventually, just as one would have to eventually go to a doctor, it's but so much you can do on the internet before eventually you do have to go to a person who does this every day.
Right.
So you may want to yoke up with someone that you trust to come along as a financial coach and just share some great ideas.
Right.
That may make
And
sense.
again, it's not only about life insurance. You know, Arlington, as a financial planner, can help you think about all kinds of financial considerations, whether you have a home, whether you have a car, whether you're thinking about getting a home, whether you're planning to get married, whether you have kids, whether you're thinking about saving for college for your children, or if you're a student, you know, whether you're at the beginning of your career, if you just graduated from college, or whether you're thinking about retirement, if you're over 45 or over 50. You know, those are the kinds of things that a person like Arlington will be able to help you out with. So I just want to leave his number with you once again at 215-435-2241. So Arlington, as we get ready to wrap up, what would you say are some of the things you'd like to leave people with to think about in terms of, you know, getting their financial house in order and thinking about insurance, retirement, taxes, all those kinds of things? What kind of advice would you give them?
Start with the people you love. If there's some people that you love, it goes beyond just money. It's a whole lot more about what you're doing for the people you love. And from the love that you have for the people and the organizations that you love, then you'll line up all the other things. But starting with first things first, start with the people you love. Start with who you love and who loves you. Mm-hmm. And love, I think, is the most important thing.
Right. Exactly. And as I always say on this program, please go to someone who has the experience and the knowledge to give you the correct information. You know, people who've been listening to me know I always say, you know, you can listen to your cousin, or you can listen to your sister-in-law or your great aunt, but it's always important to get the information from a professional, you know, someone who does this day in and day out and has a track record of success in doing this. So whether that goes for legal questions or financial matters, you know, please go to someone who has the experience in the area that you need the most help in. So again, I'd like to, thank you for coming on the show today.
Thank you for having me.
And I know this topic is really extensive. I mean, there's all kinds of insurance for all kinds of needs, and there's all kinds of financial products for all kinds of needs as well. You know, from people, as you say, from very young children to, you know, people who are just beginning their careers, to people who are looking at retirement, or people right in the middle somewhere.
And it's not as scary as people think. It's really not as scary as people think. And that's the fun part.
Right. And that's why it's important to have somebody like yourself who, whether you're single or whether you have a family, or whether you're married, or whether you're raising children on your own, you know, these are the kinds of questions that someone can put into perspective for you and figure out, okay, here's what we're working with, and here's the goal, and here's how I can help you get there.
Please, and the prices are low. They're still lower than some of the other things. I always ask somebody, like, come on, man, you want to know the prices? I can keep it under $100. Mm-hmm. You know, how much is your cell phone? Like, oh, wow. Well, how much is the cable? Oh, right. Well, okay, you got cable, you have a smartphone, and I'm telling you, we can do this for less than $100.
Right.
So then I give my phone number.
Right.
215-435-2241.
And I know that, my cell bill and my cable bill are over $100 a month. But, you know, you mentioned love, and, you know, you got to start from there and think about the people who you love. And I want to take that even further. You have to think about not only who you love, but, you know, your community as well, because a lot of people are very concerned about the community in which they live and want to leave a legacy that way. And, you know, if you're thinking about how to do it and are not sure how to do it, you can start right where you're at with your own family or people who you love.
Exactly.
And this benefit that you will leave and this legacy that you're going to provide to others can help people, you know, purchase property, you know, buy a home, you know, keep your family home within your family, you know, keep it going from generation to generation.
Many people which is a lot of
right, and a lot of people in our community don't do that.
Not enough.
Or not enough.
Those who know don't tell, and those who tell don't know.
Right. And they think that they can't afford to do that.
They wrongly think that they can't afford it. When there's a policy, there's a plan for everyone. Get in now while it's even more affordable, as opposed to getting in later. But it's never too late.
Absolutely.
So let's get it.
Absolutely. So again, I want to thank our guest today, Arlington Medley. He's a financial advisor at New York Life, and you can reach him at 215-435-2241. You're listening to Legalese with Tony Johnson on WHCR 90.3 FM. This is the legal voice of Harlem. And I just want to give everyone a heads up about next week's show. Next week's show is going to be our political show, because next week is a week from today. There will be the second presidential debates out at Whcr University on Long Island. And so since we're going to follow the day after, we're going to have a discussion with people who are on both sides, who support either Romney or President Obama, and talk about some of the things that happened at that debate on October 16th, I believe that is, next Tuesday. So again, I encourage people to tune in for that. And also the week after, we're going to have a show on people who are struggling with convictions, felony convictions, and people who are trying to either get employment or seek housing, and the challenges that they face in our community and society, and trying to rebuild their lives after coming off a felony conviction. And, there's a huge amount of people in our community who are suffering with this issue, and we want to provide some kind of information for you guys and women who are dealing with this, and try to point you in the right direction for some really, really, really useful resources. So I encourage everyone to tune in. Again, you can reach me on Facebook at Legalese with Tony Johnson, on Twitter at Tony Legalese, or my email is legalese@gmail.com. Thank you for listening, and everyone have a great evening, and I will see you next week.